The Industry Performance chapter provides you with a discussion of the key factors outside the control of an individual business that help determine the industry's performance. It also tells you a story of the key events and themes that have affected the industry over the past 5 years and how operators have coped. Key external drivers are a range of external factors that have a direct effect on industry performance and are beyond the direct control of the individual operator. Our analysts choose 4 or 5 external drivers for the industry. Each factor is then weighted to reflect how much of an effect it has on industry performance. The more important a driver is to a particular industry, the higher its weight. The sum of all weightings equals 100. There is also a direction of effect that indicates if a change in the driver will positively or negatively affect the industry. If an increase in the driver leads to an increase in industry revenue or profit, then the direction is positive. For example, a rise in household disposable income would likely increase consumer purchasing, positively affecting retail industry revenue. If an increase in the driver leads to a decrease in industry revenue or profit, then the direction is negative. For example, an increase in house prices would increase costs for consumers, negatively affecting retail industry revenue. There are different types of drivers. Domestic commodities and goods, such as the price of meat, leather, and gas. Demographics, which could include marriage rate, age brackets, and total population. And consumer behavior, such as food consumption and time spent on leisure, as well as many others, including domestic commodities and goods, financial markets, international economy and commodities, U.S. government, etc. With KEDS, you can gain an understanding of the external factors that drive industry revenue and our forecasts. Investors, banks, and accountants can use this to get a clear picture of how best to manage threats and exploit new opportunities. A portfolio manager at a bank can identify external variables that link industries and can stress test common variables to see how unrelated industries, in a supply chain sense, are linked. Auditors use this to determine the risks that business managers cannot control, and then ask their clients how they plan to mitigate such risks. KEDS linked with 2 other IBISWorld products. These products will be covered in more detail during their own videos. The first product is the iExpert Summary. Every report has a threat KED and an opportunity KED that feeds our iExpert Summary. The other product is our Business Environment Profiles. Most KEDs link with their own report that provides insight into these drivers. Current Performance is an analysis of the past 5 years, including key events and trends that affected industry performance and how companies have coped. It also includes trends in key statistics, such as revenue and profit, discussion of influence of KEDs on performance, and discussion on players, life cycle, products and services, regulation, and cost structure. You can also export data to Excel from the website. Many growth calculations of statistics covered in the current performance are calculated with a Kegger. Kegger is a key aspect of this section, and it generates the headline statistics for the chapter. Kegger stands for Compound Annual Growth Rate. Kegger is a number that describes the rate at which the value of a statistic will grow or has grown if it grew at a steady rate over the set period. As the name suggests, it is a composite growth rate that applies for a specified period. Kegger is best explained as an example. In the breweries industry, suppose exports were $2.17 billion in year 1, and over a 5-year period grew as the table shows. Your Kegger would be the ratio of your ending value to the beginning value. 10.2% is the compound growth rate for 5 years of breweries' exports. In reality, it grew some years and declined in others, but the 10.2% represents a smoothed annualized gain over the 5 years. You will need to have an understanding of how it is calculated and what it represents. Current Performance is popular with most of our clients across all client groups. You have the ability to copy and paste this into your own reports to show how the industry works in the real world. For example, a private equity group could use this for a swift update on the industry of a potential investment company, so they can see if the company is performing better or worse than the industry, and spot any potential red flags. An analyst or managing director could use this to gain high-level knowledge about the industry, so initial meetings with management can be more productive. In summary, the Industry Performance chapter is important because it provides insight and analysis of the key factors outside the control of an individual business that help determine the industry's performance. It also tells you a story of the key events and themes that have affected the industry over the past 5 years and how operators have coped. Along with the United States, IBISWorld offers research on United Kingdom, Canada, Australia, China, and global industries. To get started today, visit www.ibisworld.com. Thank you.